Hi, I'm Jim Miller, founder of Astero Group. If you're a founder looking to raise capital, whether it's your first time or your fifth, you might be wondering, can a fractional CFO really help? Today I'll break it down, what a fractional CFO does, how we support the capital raise process, and a real-world example of how we helped one company recently secure $3.2 million in funding. Let's get into it. Let's start with the basics. A fractional CFO is a senior financial strategist you bring on part-time without paying full-time executive salaries. We don't just track your numbers, we help you understand what they mean and how to use them. At Astero Group, we plug into businesses doing $2 million to $20 million in revenue and serve as an embedded CFO, guiding decisions that directly impact growth, margins, and funding. We're not glorified bookkeepers, we're strategic partners who bridge the gap between your vision and your financial reality, and that's never more important than when you're raising money. Raising capital is part numbers, part narrative, and most founders underestimate both. And here's where a fractional CFO changes the game. I'll give you a few. So number one, financial cleanup and investor-ready reporting. Investors want clarity. If your books are messy or your P&L looks like junk, that's a red flag. We get your numbers tight, gap aligned if needed, and package them in a way that builds trust instantly, often with a visual component as well. Number two, investor-grade financial modeling. Most pitch decks have hockey stick charts with no story underneath, or we build real models, 3-statement projections, scenario planning, burn rate analysis, so you know your numbers and you can defend them. Number three, storytelling with substance. So your pitch isn't just a story, it's a story backed by data, and we align your vision with metrics, CAC, LTV, margins, runway. Every line tells investors this founder knows their stuff. Number four, valuation and term sheet strategy. So a good CFO helps you avoid overpricing or undervaluing your raise. We guide valuation ranges, help you negotiate dilution, and review terms that could cost you equity or control. Number five, due diligence support. So the raise doesn't end when you get a yes. Due diligence is where many deals fall apart. We prep data rooms, answer investor questions, and keep the process moving without delays. Number six, fundraising efficiency. So if you're trying to raise and run the business, something slips. And we keep the financial side of the raise moving while you focus on closing deals and running the company. So quick story, we worked with a medtech startup with early traction, and they had promising contracts. They had the deck, the vision, and a few interested investors already, but they didn't have a financial model, and their QuickBooks wasn't investor ready. So we stepped in, oversaw the cleanup of their books, built a custom forecast that supported their GTM plan, their go-to-market plan, aligned it with the KPIs, and packaged a data room investors loved. We joined one of the investor calls, prepped the CEO for tough questions, and negotiated their term sheet. In under 90 days, they raised $3.2 million on terms they were really proud of. And I guess the last thing, so most founders, they wait too long. And so if you're even thinking about raising in the next 6 to 12 months, the time to bring in a CFO is now. And that really gives us space to get everything in order, build your model, and make your raise efficient, not stressful. So we're not just here to help you raise, we're here to help you grow into the kind of company that gets funded. So can a fractional CFO help you raise capital? Absolutely. And not just any fractional CFO. You want a fractional CFO that has been, deep experience executing what you're trying to do. At Astero Group, we work with ambitious founders who are building baller businesses, and we help you raise clarity, confidence, and control. If you are preparing for a raise, let's talk. And if you found this video helpful, hit like, subscribe, and check out the full case study below in the description. I'll put that there if the platform allows it. Take care.